Hi guys, welcome back to Real Estate Informed. I'm Kevin, and today we're going to be talking about interest rates. A question that I keep getting often is, after this pandemic is over, will interest rates go up? And the simple answer to that is no. Interest rates will not go up. And the reasoning behind that is very simple. When the government is going into debt, they lower interest rates. When the government is trying to get rid of debt, they are trying to increase the interest rates. And so we could just look at history. In 2018, in the summer of 2018, real estate market was hot. I believe it was the second or third quarter, the Federal Reserve increased interest rates just a little bit, and the real estate immediately had an effect because of increased interest rates. When the Federal Reserve saw that in the fourth quarter, they reduced the interest rates again because they saw real estate prices were starting to fall. So what they do is lower the interest rate to stimulate the economy, and then when the economy is doing really good, everyone's all happy, then what they do is they go back to the trillions and trillions of dollars that the US government owes in debt. They try to pay that off by increasing the interest rates. And so the Federal Reserve then will increase those interest rates to pay off that debt. So right now, the government is just printing money. We got the PPP, we got the EIDL, we got the unemployment, we got the $1,200 stimulus checks. I mean, the government is going 2.2 trillion in stimulus, and now there's like a second, a third, a fourth round of that going on now. Nothing's been voted on yet, but so the government is just printing out money, going into more and more debt. So when you're printing out money and going into more debt, you must keep the country must keep the interest rates low to stimulate the economy. I don't think there'll be anything worse than coming out of this pandemic, and seeing interest rates go up to 5, 6, 7%, because that will completely destroy the housing market that we've built for the last 8 to 10 years, ever since 2008. It's been over 10 years now, but in some parts of the countries, the bottom was actually in 2012 or whatnot. So 8-9 years of building, of gradual price growth will just be destroyed. So the government would try to minimize that to keep the interest rates low, but then you'll face other issues, which I'll discuss in other videos or whatnot. But for the question of will interest rates go up? No, the answer is no, and that's just because the Federal Reserve treats interest rates as like a lever that they can pull on. If the economy's tanking, they pull that lever and lower the interest rates. And we're already at such low interest rates as it is. It's almost like that lever's running out of room. You know what I mean? It's running out of space to pull because there's not enough. You're already at such a low rate. If you were at 6% interest rate, you could lower it to 5. You could lower it to 4. But if you're already sitting at 3 point something percent, the Federal Reserve is actually lower than that. 3 point something is just what we get out in the public after the bank gets their spread. So definitely interest rates will not go up in the near future. 1 year, 2 years, I don't see it going up. I see after this pandemic, the government is just going to be focused on stimulating the economy, because if they're not, then we will be in trouble. That's for sure. So that's to answer your question. If you like the video, please thumbs it up. Please subscribe to the channel, and please, if you have a comment or a question, leave it below in the comment section, and I will answer it in my next video. All right, thanks guys. Have a blessed day.